Hey everybody, it's Randy with the Del Real Group. I just wanted to put together another market trend evaluation for you. This one is up to 2022 December. Okay, so generally when I do these, you'll see they're always roughly 30 days behind. That's because if I were to put you in escrow, say today, generally an escrow is 30 days, so we won't see the actual trend occur until the 30-day period. So basically, the home won't become an actual comp until after the transaction is fulfilled, which is why today's month is going to be a lagging indicator, and we'll see it the following month, okay? But these are the trends that just came out, so I'll go ahead and dive into these. Again, I'm gonna do these every month for you, so if you have any questions at all, if you want any changes at all, feel free to let me know and I'll jump on it for you, okay? So we'll go ahead and pull this up right here. This is for Stanislaus County, just because a majority of you guys are from Stanislaus. San Joaquin County is very similar, and you'll see that the trends echo the exact same sentiment. Okay, so we'll go ahead and start here. This right here is the for sale, sold, and pending chart. And what this is specifying is the amount of homes that are for sale currently and actually on the market, the amount of homes that recently sold, and the amount of homes that are currently pending. Okay, so there's a couple key things that'll go here. I'm gonna go ahead and highlight as we show. Now, you'll see here throughout the duration of the end of the month, we're seeing inventory come down, right? This is a direct reflection to the holiday season that was occurring, as well as interest rates being a little bit high. As you can see, in the beginning of the year, the inventory was pretty low, right? And then you've seen the inventory skyrocket right here. This is a direct reflection to the Fed doing a pivot and slowing the whole entire market down, right? So this is because they raised the interest rate all the way to about 7%. So you're seeing a direct reflection to that here in the amount of inventory and pending sales are coming down right here, okay? This downswing is from the holiday season occurring. So since the holidays are coming up, less buyers want to be out there actually purchasing a home because they want to spend the money on gifts and other stuff. So you're seeing generally, and this is normal, in October, November, December, we're seeing a decrease in the amount of inventory that's available on the market. Now, back to this front chart here. This is cool because we're seeing here January, February, and March. We're seeing this exact same trend occur right now in 2023. And you're seeing that pending line is going up. So buyers are back out, right? Buyers are coming back out because now it's a new part of the year. People are getting accustomed to the rates, which, by the way, they're currently at about a 6% interest rate right now. So we've seen the interest rate come down quite a bit because the inflationary rate's getting better. But we're also seeing pending sales come up. So as soon as the first of the month hit, a lot of people were coming back out to get pre-approved again. So buyers are getting active again. And as you see here on this trend, you're seeing that inventory takes a little bit of time to catch up to that new pending swing, right? And then it starts catching up in April. We start seeing a whole lot of fireworks because people are starting to get out of school soon. Summer's right around the corner, so it's time for buyers to go back out shopping. So if you're a seller, that's a good thing. That means if you put your house on the market right now, you're gonna have a lot more viewers looking at it. If you're a buyer, it's also a good thing because inventory is gonna start coming up and you're gonna have a good opportunity out there available for negotiation power once things start picking up a little bit more into the summer, okay? And we're also seeing interest rates come down a little bit, but that's a topic for another conversation. Based off the inventory over the last 12 months, we were in a COVID year, so it was a little bit of an anomaly. But over the last 12 months, from December to December, we've seen a 37% increase in inventory available on the market. So that's a lot more homes for buyers to go ahead and choose from. So if you're a seller, just know that there's 37% more homes that are available for buyers to actually view and see if they want to buy those, right? So we got to make sure that we position your home properly. Marketing needs to be absolutely perfect. Everything needs to be dialed in. Okay, now we'll go ahead and move on to the following chart here. This one right here is the average price per square foot. Now, a lot of people feel like this market crash has been intense, right? I agree, you agree, everybody's feeling it. It feels like everything is much more expensive. But what does it mean for housing? A lot of people are saying, okay, 2008 recession, the market's going to crap, values are going down significantly. But in reality, it's not. So let me go ahead and highlight these two key factors here. And if you looked at my trend last month, you've seen this exact same thing. Over the last year, this is price per square foot, by the way. So this is the amount of homes that are sold. This is the average price per square foot at what they're selling, okay? So if you're looking here, since last year during COVID market, before the interest rate went crazy, we're only down $2 a square foot, right? So over a 12-month period, values are only down 0.7%, okay? Now that's awesome. That's good because that just means that all the appreciation that we gained in 2022 just came back to zero, right? So it's just a wash. You didn't lose any value over the last year. So all the 20% appreciation that you got from the two COVID years, those are still good. You didn't lose any of that. All you lost was the appreciation that we had this calendar year, Okay, so if you're a seller, just know that it feels like you're losing a lot of money, but the market is simply just taking back what it gave this calendar year, and we're going to be okay. We predict that 2023 is also going to be a pretty flat year, just like this one. Okay, also for buyers, that's good for you too. But also, you should know that we're not going to just go and offer $100,000, $200,000 under asking price, unless the seller is being unreasonable with how they're positioning their home. Okay, this tells us that we need to be realistic. As long as a home's priced accordingly, the values are still there, right? Now this one right here is the time that a home is sitting on the market. Now, if you look right here, during COVID, homes were flying. Everybody knows it. If you're a seller, the home was gone as soon as you put it up. If you were a buyer, you needed to compete quick, or 10 offers were going to be on the house, right? That's right here. You're seeing homes were sitting on the market roughly 18 to 23 days. Since the interest rate peak, we've seen a big jump. Over the last 12 months, there's been a 95.2% increase in time that a home is staying on the market. So a home, if you're a seller, just know that you have to brace a little bit longer. The home's gonna sit a little bit longer, but it's still gonna sell, okay? Unless you're not pricing it accordingly and your property gets stale and buyers don't want it, because again, inventory is also up 32%, so they have other options. So we gotta make sure that we're pricing properly and marketing properly, okay? If you're a buyer, that's good too. That tells you that if these values are significantly high, if a home's on the market for 120 days, well then those sellers might be desperate to sell. They might be not rational with how they're pricing the home. So there might be some negotiation power there for you to dwindle the price down a little bit, right? That is a key factor when you're actually able to move on to the home. But another thing for sellers, right now, if you're listing your home properly, on average, homes are getting 95% of what they're listed at, right? So if you're listed for $100,000, you can expect a $95,000 closing rate, meaning an offer is going to come in at $95,000. On average, throughout Stanislaus County, that's what things are looking like right now, okay? But these are the trends all the way up for 2022 in December. I'm gonna go ahead and put together the one for 2023 for you guys in January, once January is over, so you guys are gonna get that in February. But these are the trends for you. Again, my name is Randy Thomas. If you have any questions at all, if you're a buyer, if you're a seller, if you just wanna know a little bit more information about what to expect for you and what it means for you, feel free to send me a text or a call. You can respond to this email here or this text here, and I'll go ahead and jump on things and break things out in a little more detail for you, okay? So I hope this made a lot of sense for you. Again, if you have any feedback at all, if you want any other information, if you want me to display this in any other way, let me know, and I'll make sure to tailor it. That way this is getting better over time. Because again, my job's not just to push you into a house, it's also to keep you educated and informed, okay? So let me know if you have any questions. Again, Randy Thomas with the Del Real Group, and I look forward to having more conversations with you here in a little bit, okay? Take care, everybody.